We're going to go over the market and then go over the trades on the day. Gold and silver had a good day of trading. Some of the highlights of the day were the metals markets. You see the market making lows right here at 11:30, right at 11:30, just a reversal. This is an old-fashioned Europe closes at 11:30, market rebounds. It's kind of an old trade, we've seen the dip buyers stepping in all week, and today the short-term dip buyers gave up. It looks like the long-term institutional traders came in here and decided to buy this dip. Thought it was a little premature. Bonds made new lows today. 30-year bonds made new lows, which means higher interest rates. And not so sure this trade will hold. There's a lot of money on the sidelines, so the irrationality of higher highs could happen. So the market could run up. It gives us a two-sided market, and that's good. Overall, an up day, but was surprised to see this this trade, which we normally see this dip buying by institution on the decreasing interest rate environment, dip buying. So anyways, let's go look at the trades on the day. Adaptive moving average was definitely the winner on the day, plus 48.25. Called that V reversal really, really well. It was long and then short and then rallied. This strategy has struggled though. It has struggled so much I considered removing it from the portfolios. I've even considered taking the exact opposite trade. And oftentimes when I think about removing it or taking the exact opposite trade, it's usually the bottom. And February 23 was the bottom on this so far, and it's rebounded from about minus $17,000 drawdown. Now you can do this if you're trading a portfolio of strategies. $17,000 drawdown all the way to about, what number is that? It's about a $15,000. It's $4,000. About a $13,000 bounce, and 4,800 of that was today. You can see that moving higher in this market, and you see more green lately than yellow. Yellow are losing days. We had a lot of losing days, and so some big trades. You see these big trades it makes versus all the chop it took back here. So kept it in there for that reason. May adjust it or take it out later, but hate to just get out of a strategy when it's in a portfolio. It's only one strategy in a portfolio, but hate to get out of a strategy in a portfolio when it's going straight down before it bounces somewhat. So SR Counter Trend 2 VTM 1M plus 575, plus 575, plus 575. By the way, the SR Counter Trends are having a really good year. We're going to see that in gold and silver here in a minute. SR Counter Trend 2 V2M 1M ES minus 725, the 15-minute minus 725. Those were down on the day. And let's look at tick pullback. Got in on this trade early, minus 525 on that trade. One of the things we could do in this is to increase the max daily entries. Let's see what would happen if we had 2 max daily entries on this. It would have entered again right there. So that's not a good choice, but there was some price action in here where it could have captured the reversal. So I want to maybe look. One of the things I'm going to look at in researching this strategy is maybe if it has a trade in the morning that loses, then potentially look for a trade in the afternoon, because I believe it would have captured this V bounce, and because it was stopped out, it did not take a trade again. We don't want to keep taking trades on the way down though either. So something to consider. I'm going to change that back to just 1 max daily entry instead of 2. Let's just for kicks, let's try 5 and see what would have happened. It probably would have captured it, captured another loser before a winner. Let's see. So it only needed a third trade. It had 2 losses here, and then it captured this V reversal. So that's one of the things I'm going to be looking at is you want to take multiple trades potentially, but not get right back in. Maybe a time period between the stop loss and the re-entry. So maybe 1 max trade in the morning, 1 max trade in the afternoon for something like this, a V reversal type day. So cover 3, meaning S&P stopped out minus 625. 60-minute breakout plus 975. After hours 3.0 minus 725. And you see just this diverging market pattern here. It's kind of that megaphone pattern, I guess you could say. I'm trying to get the pin out. Hang on. So just kind of diverging all day in both directions. Really, you can see it here, and then it breaks out. So this is kind of coming into this, but there's a bullish bias, so it broke through, and after hours, that there's more weakness now in this time period since we've been down. So kind of like night trader, these after hours and long only strategies that trade during the after hours, right when the market reopens and as Asia opens, and then when Europe opens, the uptrend has not been as strong, and so that's a key indicator to potentially tell us that this bull market is not what we think it is, and gives us more reason to believe that we could potentially have better short trades as we roll into a bear market. 60-minute breakout short stopped out even in this downtrend because it's so choppy. You see how much choppier the downtrend is than the uptrend. This is just unprecedented price action. Jobs Friday, but still 38.10 all the way down to 37.30, so 80 points down, then 37.30 up to 38.50, then plus 120 points. And so the perception, is 80 times 50 is $4,000 per contract on the E-mini S&P, and then $6,000 per contract here. Catching these turning points, though, is tricky and oftentimes very hard to do. So let's look at adaptive moving average. Did that today. 60-minute breakout did that, and overall it was an up day in these stock indexes. Let's look at 60-minute. Let's look at the NQ on the day. S&P Counter Trend 2 NQ plus 775. S&P Counter Trend 2 V2M 1M plus 575, plus 575 on the 5M, plus 575 on the 15M. S&P Counter Trend 2 V2M 1M plus 575. S&P Counter Trends are having a good year after it struggled last year with the pandemic, with all the V patterns in the pandemic. Tick pullback, minus 725 here. Once again, would have done better trading this probably once again in the afternoon. Although it's such a wobbly, from this point forward, it looks pretty wobbly and weak, this uptrend. So will be interesting to see what happens. Another reason this rally probably happened at the low is the shorts did not want to hold short over the weekend for any news, Fed action, stimulus, whatever might happen. Sitting on some pretty good profits, so there's probably some short covering, profitable short covering happening. Minus 365 stock index swing, plus 475, and then minus 1,025 a 60-minute breakout. Gap continuation. I'm not trading this one. Stop loss is too tight. Minus 975. Probably be good idea to take the opposite of this strategy right here with such a tight stop. You see the equity curve has kind of gone sideways to down lately with the extra volatility in the NASDAQ. If you look at this, look at this turning point right here. You're at 12,600, you're down at 12,200, so you have about $8,000 per contract from high to low, and then from 12,200 up to 700 is about $10,000, so $18,000 if you call the exact turning points. So lots of perceived opportunity here. In reality, it's a little trickier to see during the day when you're not used to those ranges. So Beta B, VSD, minus 975 on the day. Gap continuation 2019, $700 stop loss, minus 725. Viper had a losing day yesterday. Captured that last short of the day, plus 800 a day. Did a good job not taking additional shorts as the market rallied. EVP 1 NQ plus 1175 on the day. Captured this short, got out on a trailing stop loss. A bigger trailing stop loss would have captured more profits. And then it captured here this trade at the end of the day. So plus 1175. And Beta C, PR breakout, minus 155. Lots of little trades in here. Just the parameters are just tight for this market environment. Plus 750 here. Those are all the trades in this workspace. Now the highlight was gold, SR Counter Trends once again. Plus 575 on SR Counter Trend 2 V2M 1M. And then SR Counter Trend 2 Gold plus 475. SR Counter Trend 3A plus 475. Plus 475 on SR Counter Trend 3B. Cobra Gold plus 575. Gold Flash plus 675. We used to like Gold Flash on Jobs Friday, and this year it's it's starting to make a comeback. Let me show you, you know, how this strategy performs. It hasn't been as good lately, but it's one of our old strategies. We're not trading this right now, still watching it though, and oftentimes it can do well on Jobs Friday. Good job on Gold Flash. Silver doesn't trade much. Traded today and yesterday, plus 475, or yeah, plus 575, plus 575, and plus 475 over here on Esther Counter Trend 2. And let's look at VSD long short, minus 26.55. Crude oil, no trades on the day. Crude continues higher, plus $2.45 today. Soybeans is higher. I want to look at soybeans. No trades on soybeans. Plus 22 today. Interest rates were near lows. Exhaust and reverse was down. But look, interest rates were at these last Thursday spike lows. It traded in that range. Crude oil was higher. Soybeans was higher. These are all indicators of inflation. The bulls have said that low interest rates have enabled the stock market to go higher. Now that interest rates are moving higher, the bulls say that it's not going to hurt the stock market. So it's kind of a double speak in my opinion. I think it's going to hurt the market. I think inflation is going to hurt the market somewhat, and so we'll see how much it hurts it. Euro minus 350. Soybeans, no trades on the day. Exhaust and reverse. Optional strategies. Looking at Cobra 3s, the profit target version of Cobra 3, even S&P minus 625. The VSD Night Trader, trading that one in this micro stock index and gold portfolio plus 675. So those are the trades on the day. We'll have the portfolio calculator updated over the weekend. I've updated the site as well. Show you that. So here's the site, latest updates for the way the site looks. Calculator right here. You can download that. It's updated through yesterday. See equity peaks in the 50K and 200K portfolio, as well as the All Strategy Access Shortlist 51. And so yeah, this is the latest. I'll be updating these. I've gone back to my old website format. It's easier for me to update. I tried to make a website where it was easier to update, but this one is easier to update. So back to the old format. I like this better. It's faster, more efficient, easier to find. So have a good weekend. This is March the 5th, 2021.